Welcome to Smart Stock Watch. Today is April 29th, 2025, and we're diving into Visa's fiscal second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Visa's latest earnings report is packed with insights, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Visa reported a net revenue of $9.6 billion for Q2 2025, marking a 9% increase. However, GAAP net income saw a slight decline. John, can you elaborate on these figures?
Absolutely. The revenue growth was driven by strong performance in payments volume, cross-border volume, and processed transactions. Despite a 2% decline in GAAP net income, Visa's non-GAAP net income rose by 6% to $5.4 billion, with an adjusted EPS of $2.76, beating the forecast of $2.68 from 14 analysts.
That's impressive. What factors contributed to this performance?
Visa's diversified business model and focus on innovation have been key drivers. The company has effectively managed macroeconomic uncertainties, maintaining resilient consumer spending and expanding its strategic initiatives.
Operational efficiencies and future outlook. Visa processed 60.7 billion transactions this quarter, a 9% increase. Cross-border volume also saw a significant rise. How does this impact Visa's future outlook?
These metrics are crucial for Visa's growth trajectory. The 13% increase in cross-border volume, especially excluding intra-Europe transactions, highlights Visa's strong international presence. Additionally, the new $30 billion share repurchase program signals confidence in their long-term strategy.
What did Visa's CEO, Ryan McInerney, have to say about these results?
He emphasized the strong revenue growth driven by healthy trends in payments and cross-border volumes. McInerney also highlighted Visa's strategic focus on consumer payments, commercial solutions, and innovation as key to their continued success.
Financial health and strategic initiatives. Visa's financial health seems robust with $15.2 billion in cash and equivalents. However, operating expenses increased significantly. Can you explain this?
Indeed, Visa's cash position is strong, allowing them to return $5.6 billion to shareholders through share repurchases and dividends. The 22% rise in operating expenses was primarily due to increased litigation provisions, but excluding these, non-GAAP operating expenses rose by a more modest 7%.
How do client incentives play into this?
Client incentives, which increased by 15%, are a strategic tool for Visa to maintain and grow its client base. This investment is crucial for sustaining long-term growth and competitive positioning in the payments industry.
Key takeaways. In summary, Visa has delivered a strong performance this quarter with impressive revenue growth and strategic initiatives. John, any final thoughts on Visa's investment prospects?
Visa's robust financial health, strategic focus on innovation, and strong market position make it a compelling investment. The new share repurchase program further underscores their confidence in future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Visa's performance in the comments below.